Why is the liquidity trap a problem for monetary policy? Imagine trying to push a car that's stuck in mud. No matter how hard you push, it just won't move. That's similar to what happens in a liquidity trap. When interest rates are already near zero, central banks can't lower them further to encourage borrowing and spending. They've hit a wall. This situation makes traditional monetary policy tools ineffective because people prefer to hold onto cash rather than spend or invest it. Even if the central bank floods the economy with money, it doesn't lead to more demand or higher prices. This is especially true during deflation, when prices are falling and people expect prices to drop even more. When prices decline, the real value of debt increases, making borrowing less attractive. People and businesses become more cautious, saving rather than spending, which deepens economic stagnation. This cycle can last 4 years, as seen during the Great Depression and Japan's economic slump starting in the 1990s. Despite efforts to boost the economy through more money, growth remains sluggish because the extra cash just sits in bank accounts. Because lowering interest rates no longer works, governments often step in with fiscal policies. They might spend more or cut taxes to directly increase demand. This helps to push the economy out of the trap by encouraging spending and investment. The main problem with a liquidity trap is that it limits what monetary policy can do. When interest rates are already so low, it's like trying to push a car that's stuck in mud. No matter how much extra effort you put in, it doesn't budge. This often leads to prolonged periods of slow growth or deflation. To get out of this situation, policymakers need to think beyond just lowering interest rates. They may have to use unconventional methods or focus on government spending to boost confidence and demand. This situation highlights the limits of relying only on monetary policy during tough economic times and shows why coordinated efforts with fiscal policy are often necessary.